What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and today's video is going to be a little bit different. We're going to be going over a lot of things. We're going to be going over the Dow Jones, the DXY, and of course, Bitcoin. We'll also be taking a look at XRP, BNB, Tesla, and a few other things. So definitely stick around for the whole video. And if you like this style video, definitely let me know in the comments below. We're going to be going over a lot today, so make sure you guys smash that thumbs up. Leave your comments below. Let me know what you think of the video. I do want to put out some serious caution. I know I've been bearish on Bitcoin for quite a while. I still am. I still think we're going to see new lower lows. And if nothing else, you should at least watch so at least you can go over the information yourself, kind of get a different view on the markets than all the push higher, higher, higher stuff you're hearing. All right, let's get into the video. All right, we're going to start out with the DXY, the dollar index. So we've had this chart up for an extremely long time, right? I am bullish on the dollar still. Now, I know a lot of people really think the dollar's dying. I do not. I think the dollar is going to make a huge move to the upside soon. And right now, if we take a Fibonacci retracement from this low right here to this high, we get our 0.786, which would most likely make this a wave 1, and this is a 2 we're forming down here. Could we come down, if you look at the dotted trend line here, could we come down to 101.2 area for our bounce? If so, then the markets will probably get one more boost up before the dollar turns around here. I do think it will be turning around. If this happens to break, then we look for a retest of the white falling wedge. But right now we're going to concentrate on the yellow one here, looking at a bounce. If it even gets down there, right? It doesn't have to. We are showing some bullish divergence right here on the RSI. We're getting lower high or higher lows, but yet in the price action, we're getting lower lows, which is bullish divergence. Even if we get to that 101, as long as we don't break this RSI bottom right here, we're going to create bullish divergence. And then I do believe it is major upside. Now, the measured move from the break of this yellow dotted falling wedge right here gets us up to about 109.83. Although I think we'll go much higher than that. You guys know, if you watch my channel, I have super high targets. If you look at the big picture of the DXY, it's bullish. This was a huge pullback. Let's take a look at what's going on with the Dow Jones next. All right, guys, so this is the Dow Jones. If you look to the right of me, you'll see the 1929 Great Depression, the big, huge crisis, the big crash. And if you look to the left of me, you'll see where we're at now. You'll see how there is some confluence in the charts. They kind of rhyme. Obviously, nothing is exact, but what I want to warn about is we are up 481% from the low down here. Now, back here, we did a 513% before this big crash. Is that going to happen again? There's no guarantees. None of this is financial advice, but things are looking very scary in the markets. I thought this right here might have been the top up on the left, but we obviously did get a little higher. Is this the time to buy into markets? In my opinion, my honest opinion is no, absolutely not. For traders, you might get smaller time frame trades out of this, but for the big picture, it does not look like, to me, does not look like a time to FOMO in and think, the markets are going to continue up. Now, they could continue up a little bit and still come crashing down. So just be aware of this. I want to point this stuff out to people because a lot of people just don't get it. What do you think was happening back here, right? Everybody was super bullish on the market. They thought they couldn't lose. Everybody was making tons of money. And then, during this time, you see what happened. Now, a lot of people talk about, that the times are different. People have phones and can get, trade on their phones, get in markets on their phones, out of markets makes it different. Well, that's true. It could make the sell-off a lot harder too. I just want to point this out. I want to spread caution. These markets look very scary. If you look around today, your neighbors, people that are working regular jobs that 4 years ago working the same job. They were really well off. Everything was great. And right now they're more or less struggling, right? So the signs are in the economy, guys. If you remember 2008, right here, right? Now, a lot of people talk about they'll keep the markets pumping because of election year. Well, this was an election year right here, and you see what happened. So, watch what you're listening to, and a lot of these people spurt this stuff out or just regurgitating what somebody else said and not really looking at the markets. So be extremely cautious in this area, guys, especially if you're looking long term. This could be a very long bear market. When it does take off for the traditionals, I think Bitcoin has already entered its bear market, and we've just had a bear market rally in Bitcoin. We'll go over that here in a few. Next, we're going to be going over the gold charts. All right, so now looking at gold in the macro. So I do believe this is a 5-wave count in the macro for Elliott wave count. I thought that the 5th wave ended here with the triple top, but we did get one more boost up, which is not uncommon for an Elliott wave count, right? So if we look at this in a smaller view, let's do this. Let's put the 5 waves within. So we have a wave 1, 2, 3, 4, and then we broke our high of wave 3 here. So that looks like, let me make that yellow so you can see it. So a smaller Elliott wave count within the 5th wave, right? We could have 5 waves finished. Now, could that go higher? Yes, if the markets continue up a little bit, it could go a little bit higher. Now, if you look here, back in 2008, actually, it was around in the month of March 2008, we had this big crash here. So when the markets crash, gold crashes along with it. A lot of people think it's a safe bet to go into gold. Gold went down about 30%, which was less than what the traditional markets went down. So technically, yes, it was safer, but gold crashes right along with it. Now, that's why the same for Bitcoin. I think when the market crashes, Bitcoin is a high-risk asset, will be one of the first ones to come down and come down hard. Let me know what you think of that. Let's get into the S&P next. Take a look at that, see what's going on. And now looking at the S&P is the only one out of the Dow Jones and NASDAQ that hasn't broke its high. So there is still a possibility this breaks the high, and of course much higher if traditionals go up. But like I said, I'm giving you guys the contrarian view according to everybody else being extremely bullish. But if you'll notice back here in 2007, at the 2008 crash, right, it broke its high that it had back in 2000 right here, right? Just barely broke it and then came crashing down. So there's another sign that these markets could definitely be coming down. I cannot stress enough how bad this could get if I'm correct about this crash. This could be, years of a bear market. So just be cautious, guys. Be careful. For those of you that invest. Again, this is not financial advice. I'm sharing my opinion and my views of the market, because markets, basically the lines on the chart are human emotion, and human emotion does not change. It just repeats itself over and over, and you can see it in the charts in smaller time frames, bigger time frames. Of course, in this video, we're looking at the macro. So next, we're going to be looking at Bitcoin, but before we do, definitely check out the sponsor of the channel, Prime XBT. You can trade traditional markets, crypto, everything, all from one exchange. You can use my link down below. That will get you up to a $7,000 bonus. I'll leave another link up top. If you guys haven't checked it out yet, definitely check it out if you want to learn how to place orders. All right, let's get into it. Next, we're going to be getting into Bitcoin. So here it is. Looking over to the left of me, you'll see the 2017 top, right? And then we had our low. If we put the Fibonacci retracements from the high to low, what do we get? We get the golden pocket zone between the 618 or 0.618 and 0.65. If we were to do the same thing here, that would get us somewhere between 48.55 and 50,200 if we get up to them levels. Now, if you're looking at it to play exact, where would that get us? Down to about the 17,000, which a lot of people are talking about. But if you look here, once we made our high, we never broke our high here. Once we made our high here, we broke that high. I do think that there's still a very good possibility that we make new lows. My targets have been and still are for the bottom of this bear market for Bitcoin, 3,500 to 9,700. Now, if we break new all-time highs, all that's out the window, right? But what I'm looking at now is this golden pocket zone as a possible massive short area. Depending, this could come down, come all the way up, and then no matter what, I still think we have lower lows coming, whether it takes months or even a few years, depending on what the traditional markets do. As I showed you in the prior parts of the video, all the markets are showing very toppy signs, like massive exuberance. If you were around back here for 2019, in the summer of 2019, everyone was extremely bullish on Bitcoin. It was definitely bottomed. It was going to new all-time highs. We didn't create a new bottom, but we did have a massive crash. That was let's see how far that fell. It fell a whopping 72%. So let's just say we do a 72% from here. What would that be? That would get us down to approximately 12,300 range. So just another way to look at it, guys. Be careful, be cautious. Let's go into the daily chart here. We were looking at this as a possible rising broadening wedge. If we were to get back up, if we break this wedge, then this will be invalidated. And as of right now, it's about 46,500, right? So if we do not break this, I do see us coming back down to test the bottom of this, depending on if, when, and where it hits. And then we would take a measured move of the break down to 10.3. Now, what happens if it breaks up? Could you use a measured move to look for a super bullish scenario? Yes, you could. So a break of this, although we would have to break through our golden pocket zone, would get you all the way up into the 65,000 range. I think that's unlikely, in my opinion. We'll see what happens. I still would have to see it break above this trend line here at 46.5 before even considering that. But then again, we got to look at that 0.618 and 0.65 golden pocket zone, because a retracement of a big move often hits that zone, right? Could go as high as the 78 or 0.786, but we'll look at that as it comes. Another look here, we were looking at this as a rising broadening wedge, broke out, broke back in it. Where's the top of this wedge now? About 45.5, right? And we were looking at this triangle in here, the measured move of that. There's many ways to look at this market, guys. You can say you're changing your views and blah, 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 but it's not. This has all been here. We've been watching it. This will get you between 47 and 48, which would also get us around that golden pocket zone. Either way, we're looking at the macro here, and the macro is bearish. Let's take a look at BNB. BNB. So where is our next points of resistance for BNB? Well, right here on this trend line coming down. We'll look at the bullish case too for all you BNB bulls out there. But around 285, right? If we don't get rejected there, our next rejection point is 299. Now, if we break that 285, this could be a breakout of this. We would draw a trend line on the bottom right here, like that. And then this breakout would get us as high as 534. Yes, markets can go up. Markets can go down. I think we are going to continue to the downside. Like I've said and been saying, once we break 202, I'm looking for 153 and then 69. If 69 breaks, I believe BNB is dead. Now, for the worst performing cryptos that's been around for a long time, still no new all-time highs. We've not been able to open and close a weekly candle above my white trend line here. And again, when do I get bullish on XRP? Well, if it breaks this top trend line, which right now lies around 85 cents. I think that's unlikely. This is a major hyped pump and dump coin. You can see if you look at the whole picture here, it's been doing nothing but devaluing since its all-time high in 2017. My opinion's not changed on XRP. If it breaks 85 cents, I'll change my opinion on that. And that's just a trend line from these hyped pump and dump wicks right here. And Tesla. As you guys know, I'm a buyer of Tesla at 40 to 50 bucks when I believe this bear market will actually turn around and become a whole new bull market. Not that it's going to shoot straight to the moon, but it'll be a long, gradual movement to the upside. Just like you've seen after 1929 crash. It took 40 years to get to that all-time high again. 30 or 40, I don't remember. But anyways, thanks for watching the video. If you guys enjoyed this type of video, let me know in the comments below. There are many, many, many negative comments in these videos, and that is just a point of how the market's feeling, right? Nobody wants to hear the markets can come down. Same thing happened at the top at 64,000. Same thing at 65,000. I invite all the hate. It's all good. Whatever you guys want to do. I mean, that just shows you how people are, especially on the internet. Anyways, thanks for listening to my opinion. If you made it through the whole video, make sure to smash 1 in the comment section below, and I'll see you in the next one.